Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 2nd, 2018. I want to do a quick overview on the things that I've been highlighting recently. One of the reasons of my updates have been much more frequent, I'm doing these almost on a daily basis, is we've had a lot of technical developments, particularly in the broad markets. I'll get to those in a second. I'm just starting out here in order. Lately, I've been covering gold first. There's always a lot of interest in gold. For a while back, right here actually on the breakout of this bullish falling wedge a couple months ago. That was where bullish, long gold. Um, Took profits a little early, but then I started to make the case, which I still maintain, that gold is looking toppy, not looking for any type of major crash or huge correction, but I just think that the near term, the risk to reward is skewed to the downside. In other words, there's limited upside. Bigger picture is this. We have this sideways trading range right here. In fact, I should go back a little on that. Let me zoom in and show you. Here's what I'm watching, the way I'm seeing gold right now. So for a while here, we've been consolidating. Most of it has been in the lower end of this range here, down here. Well, you can't highlight over that with the same color, but so you can see it was resistance, resistance back here. We broke it, back tested that support. So this is a key level right here. This is what I'm watching on gold, 1325. I believe this is a topping pattern, and we're going to see more downside in gold, but my convictions aren't that strong. I've shared this recently. One of the reasons is if we continue to see downside in the market, um, gold will probably catch a flight to safety bid. Of course, a lot has to do with what's going on in the dollar, but if you want to know what I think is going to happen, I think if we come down a little lower, you can probably have another buying up on gold here. I think the markets might bounce soon. Gold may bounce with it, and I don't think this level is going to go now. But if it does, it does. That's the thing. What I can do is tell you that's a significant level right there around 1325. I can tell you that I think we get another bounce, but you have to respect a breakdown. If we break down, you can see my next target down there is at 1309-ish. That's gold. Moving forward, crude oil. Well, let's just go to silver. We'll stay in there. Silver, same story. Silver had a similar range, or has a range that it's been trading in right here. It's been very toppy, and I've talked about this level quite a bit extensively lately at 1692-ish. We had that one false breakdown, and that was only a single 60-minute close. If you look closely, you see that next candle. See, we had a red candle, the green candle, the following candle closed right back above. So that was a whipsaw signal, false breakdown. Fewer things are more bullish in trading than a failed breakdown. So what happens is shorts pile in. Then when you snap back up, those shorts are forced to cover. They're squeezed out. Longs pile in, and that's why you had that sudden rip. However, that rip was faded. This is very bearish to me. They could have bulls had, the onus was on the bulls to take it and run. They faded all of that and then some. And most importantly, they've broken down below my key support level now, the bottom of that range, and they've done so impulsively. Silver has done so. Three red candles right now. This was only one red candle. We're on our third red candle. It's safe to say now that that breakdown is intact. So I guess what I'm trying to say, I've mixed thoughts on the precious metals because they tend to move together. Now, silver, remember, gold is catching a flight to safety bid, and that's why you're seeing silver underperform. They're both precious metals, but gold is the one that investors flock to when there's weakness in the equity markets, and that's why you have a breakdown here in silver, but not yet in gold, that comparable level I just showed you. If gold does break down, and if silver's heading lower, a back test of that level would provide an objective short. Um, what I can tell you are the levels to watch, and we'll just have to take it from there. I'll continue to update these. Crude, same story. Was bearish back here on crude for a while, but have been calling for a top for a while now, a few weeks, saying more so that the upside was limited. The risk reward wasn't very good anymore. That I thought crude would face headwinds, and that's what's happened. It's just moved sideways here. So you can see a lot of these dollar sensitive assets like gold and silver and crude oil. They have this sort of sideways action. I think it's toppy action. If you're bullish, you can say, you can look at the glass half full, glass empty. If we break to the upside, that's bullish. If we break to the downside, that's bearish. There is some support just below around 62.19, but again, my money is and we have an official trade on the site. We're short the energy stocks. That's doing well, and I made a very strong case. I'm not going to get into those because this is a broad general market coverage here. So the trade ideas I already covered in a separate video. That's for the members, and then I posted that earlier today. But I do think at best case scenario, gold continues to trade sideways. I think the upside from here is limited, and I'm leaning towards more downside in the coming weeks to months on crude oil. But of course, watch these levels. We got to break 63.06. Then that's a minor support level there around 62.19. Let's look at the markets now. Oh no, let's look at natural gas first. Here's natural gas. Could be setting up for a bounce. Earlier this week in the trading room, somebody asked my thoughts. First, I didn't have much of an opinion until I revisited the charts here and noticed that on the 60-minute we had this powerful divergent high. We were right here. I was calling for a move down to the bottom to this support zone as well as that trend line. That's exactly what happened. However, we smashed right on through it. We had a little bit of a consolidation there and then fell. So the wedge broke down. I was thinking we might get another push up and then a breakdown, but I love these divergent high. Bottom line, when you see a divergent high on the 60-minute like that, you short it. And with natural gas, it's a very volatile, moves quick, trades well to the technicals. So that would have been a good runner short to put a short on there. But unfortunately, I covered there personally, but wish I would have, prepared for the breakdown. Either way, it may, you know what, I'm not going to go too much into this. I did a video and posted it in the trading room yesterday on a potential long trade scenario here. Overall that's bearish. I've made two cases. I showed you the seasonality chart where we have a ramp up in the winter months, December, usually anywhere November, December, a big rally in natural gas, averages about 50% or so. We got that this year, and then that's followed by a complete fade of that rally as the weather starts to warm up. Or inventories build in natural gas. So I've covered that extensively, but there is an objective trade to be made. And again, I laid that out in the trading room, so you can check that out if you're a member of the site. And let's move on to the markets now. All right, the Dow futures. Again, we're looking at the 60-minute charts. I've covered this in detail. This is one of my favorite chart patterns. I call it the wedge overthrow, where you have a clean bearish rising wedge pattern, as we did here. You overthrow the wedge right around the point where it would normally break out, which is, give or take about 70% to the apex of the wedge. Apex would be where these two lines would converge if I extended those. So a wedge overshoot is typically followed by a very swift move back down with very little reaction and just a breakthrough through the wedge. So usually when you get an overshoot, you don't come back into the wedge and then continue around in there. If you overshoot it, it's a very powerful, great sell signal, especially once you see confirmation that we've moved back down into and below the wedge. That's what you got. These were the price targets. My first target zone on the Dow, laid out in advance. You could have traded, came some bounces off that level, and now we finally broke in there convincingly, that made an impulsive breakdown. However, I see on both the Dow and the S&P 500 right now, I see bullish divergence in place. So let me highlight that. And this sets the stage for potential bounce. Potential divergence because these indicators, this MACD is still pointing lower. In my book, it's not positive divergence, or at least it's not confirmed divergence until we have a bullish crossover, meaning the MACD makes a bullish crossover or the PPO and then starts moving up before it takes out this low. That would give us positive divergence. Same with the RSI. RSI is almost about equal. Actually, we look at the RSI. Yeah, we're going to have to reverse very soon in order to give us divergence on both of these two indicators. You don't have to have it on both, but it's nice to see it. Helps build the case for reversal. So that's what you're looking at there. Potential reversal. I don't have any other support lines drawn here on this chart. So if you're looking to short, the most objective point now, if we bounce back to the bottom of this support zone, maybe with a stop over the top of it, that would be an objective entry. And if you're long or very bullish looking for new highs in the market, wait for these divergences to be confirmed or even go long now. I'll show you. Let me look at the other indices and we'll show you some other levels to watch. S&P 500. Again, these were just beautiful charts. We were getting very extended, and this whole advance from the what I call the New Year's rally, since right in the beginning of the year here, you can see the mark down here, 2018 right here. We had a very well-defined trend line in the markets, and I said once these trend lines break, that's when you're going to get a sell signal. We got it earlier in the week, very clear breakdown, impulsive selling right here. I should have circled that right there. All along, we've had these little pullback ops. You look for these divergent highs on the 60-minute charts. But as I said, one of these divergent highs will eventually be the one that breaks that trend line, and that's what happened. We broke it. The charts couldn't be working better. We came down, traded around my first support area here, for support line. Right now, we're at a just below this support zone here, these two lines. If we can reverse soon, and it would have to be very soon, we still have the potential for positive divergence. We'd be making roughly an equal low here on the MACD, but here's a problem. On the NASDAQ 100, I don't see that divergence. And the NASDAQ 100 is the leading index. So here's the NQ or the NASDAQ 100 futures. Nothing even remotely close to divergence. In fact, the indicators are still pointing clearly lower. Um, we've taken out, this was a pretty significant support level. My next target down here, about 68.44, you can see it there. If we close under there on the 60-minute basis, this is my next target zone all the way down here. This is where I'd be really interested if we work our way down here, especially if we have some bullish divergence to go long. That's about 60. I'd love to see us get down to about 67.05, somewhere in this range, and if the charts confirm go long. If you're short, couple options. I mean, you've already, depending on where you shorted, you're profitable right now. But I can tell you right here, this level, remember I've been focusing on this recently. We were tapping on this level. And I think in the last update, I said if once you tap too many times on the same support level, eventually it's going to give way. That's what happened. It gave way. You can see the impulsive selling after that breakdown. That was a key support level. Support once broken becomes resistance. So if you want to know the most objective time to short, if you're going to short at this point or add on if you've already shorted, would be a bounce back to that level. Your stop would be somewhat above. Essentially, to keep the bearish case intact, then Q needs to remain below this trading zone here, this sideways trading range, I should say. So if we take that out, the top of that's going to open the door to new highs right there. Otherwise, we could continue to melt down here. There's a lot of hot air in this market. We don't have to bounce here. We don't have to bounce anywhere, but this is where I think if we get down here, and that may happen next week, that's probably where we'll get our first bounce, the first what I call tradable bounce for swing traders that aren't very, if you're a day trader, there's been just a tremendous amount of opportunities to trade the NQ off these levels to go long on tags of support, short bounces, get short again, and then short on the breaks of these levels. Let's see. I'm going to wrap it up there. I think that's enough to watch for. And again, it's Friday. So anything you do today, any positions that you open, you have to take home over the weekend. There's those potential divergences on the SPY and the Dow. We don't have divergence on the tech stocks on the Nasdaq 100, that is. But we're not too far from the support level. We could snap back above it. And if not, I showed you the next levels to watch for. So, as a swing trader, it's up to you if you want to go. I don't have an official trade on any of the index shorts. Right now, we're trading individual ETFs and stocks. I believe every trade idea, I did cover those in a video today on the site. I believe they're all profitable. And I think there's a lot more meat on the bone on shorting those individual sectors and stocks than trading the indexes. But for what it's worth, I wanted to cover these, and I'll try to get this video out to you guys as soon as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoy and have a great week.